The share market has had its worst day since the fallout from Donald Trump's so-called Liberation Day tariffs. $59 billion has been wiped off the ASX. The sell-off was sparked in tech, with the sector losing 6%. Miners finished down for the third consecutive day, and banks also weighed heavily on the market. The ASX 200 and the All Ordinaries closed 2% lower, hitting 5-month lows. The Australian dollar is also trading down below 65 US cents. And the pessimism spread to other Asian markets. Business reporter David Taylor joins me. David, today's steep fall was led by the tech sector. What spooked investors?
Look, I think, Kirsten, there was broad selling today, which we haven't seen in quite some time. In fact, analysts have told the ABC that sometimes if the banks are doing well, the miners do badly and vice versa, but this was across the board. Banks, miners and technology stocks in particular were heavily sold off. To give you an example, WiseTech down 5%, we had Xero down 4%. Now, in terms of what we're looking for this week, Nvidia, which is part of the Magnificent Seven, is releasing its earnings results. Now, the Magnificent Seven has been crucial in lifting both the Australian share market and Wall Street to record highs. And there's a bit of anxiety and nervousness ahead of what those results might show. Indeed, there has been some selling in Nvidia ahead of these results. I'll just give you one more example, though. Bitcoin has fallen below 90,000 US dollars. And that is being said by some in the market as being a canary in the coal mine in terms of risk.
Does some of the sell-off also have to do with interest rate uncertainty?
Yeah, and look, indeed, that's why the banks were sold off today. We had Matt Comyn in front of the Standing Committee on Economics today in Federal Parliament, and he basically said that he didn't see interest rates moving at all in the near term. But more specifically, he said he didn't see an interest rate cut by the Reserve Bank in 2026. Now, whether that spooked the market or not is another question. But in addition to that, the Reserve Bank released its minutes from its November meeting and said that inflation, that core inflation, was a little bit stronger than they expected. We heard that before in the statement accompanying the monetary policy decision. But again, it probably spooked the markets today. An interest rate cut by the US Fed or the Reserve Bank is looking more and more unlikely, and it's sending shivers across the market.
Is this more than just jitters? Could this be the beginning of a long-anticipated share market correction?
Kirsten, that is the question on everybody's mind this evening, and the answer is simple. The ABC spoke to Marcus Today Senior Portfolio Manager Henry Jennings, and he told ABC that essentially he thinks that there is more to come. The market moves are broad-based. That has not been seen since Liberation Day, and the extent of the falls, he expects the selling to continue.